Leanne, great to see you there. Thank you for your time. Yeah, what did you make of the way the market tracked today?
Bridie, as you mentioned, closing relatively flat in the end, but we actually did manage to maintain a lot of that positivity for most of the day. As you said, continuing on from those positive gains that we did see yesterday. So we are actually up about 1.8% for the week so far. So coming into the last trading session tomorrow, it is looking fairly positive for the week. Of course, this morning we were able to follow on from those slight gains that we did see over in the US. We are seeing a lot of those indices continuing to flirt with some of those record highs, but overall, as you mentioned, some of the best performing sectors being that healthcare sector. I think that weaker Aussie dollar is continuing to have a positive impact there, particularly on the likes of, say, CSL. We also did see that staples sector having a positive performance today. Of course, Woolworths was really driving some of those gains after its AGM, and also having a look at that financial sector, we did see some strength across all of the major banks, but particularly NAB had a really strong performance today. That was up about 1.5%. As you said, though, continuing to see that energy sector and the materials sector coming under pressure. As expected, we're continuing to see falls in those oil prices. And of course, that iron ore price now below $69 a tonne. It was quite interesting to note, though, we did see Fortescue in positive territory today, but we did see the likes of BHP, Rio, Atlas Iron and BC Iron all coming under a fair bit of pressure. Volumes today were a little bit lighter. They were below $4 billion or so, but overall, I think probably positive that we were able to maintain some of that momentum. And as I mentioned, coming into the last day tomorrow, it does look like we're trading in positive territory for the week.
I mean, we know that the selling pressure that Woolworths has been under, the shares in recent times, you know, the likes of UBS and other brokers sort of pointing to Woolworths losing market share to some of the discount retailers like Costco and Aldi. Competition issues, of course, still a question mark over the two big supermarket giants too. What's your view on Woolworths, what it had to say today?
Bridie, I think overall the commentary certainly looked quite positive, and that's what we did see in that share price reaction. As you say, since that update around the beginning of November, the share price was down about 14% or so. So certainly investors were reacting to that negative sales update, but I think we have seen a bit of relief today following that positive commentary, saying that they do actually think that the market has overreacted to the downward pressure on that share price. Overall, though, if we look at that guidance you mentioned really looking positive, I think following the disappointing sales result where those revenues were actually softer than expected, I think that certainly added pressure in terms of the company actually meeting their earnings expectations for FY15. So certainly the company reaffirming that today has actually provided positivity for shareholders now. Secondly, looking at that home improvement area, so their Masters business, we know that this area of their company or their business has been under a lot of pressure. They've been posting results ever since about 2011 or so. But if we actually do look at the last result, we did start to see a bit of an improvement. Sales in Masters were actually up about 31% or so. Again, some positive commentary coming from the CEOs today, saying that they actually expect that that area of the business will be a significant contributor over time. So again, that was looking very positive. But as you mentioned, one of the other issues has been in terms of competition. So intense competition from the likes of Coles, Aldi and Costco. But again, they address this by saying that they actually welcome the competition because that will lead to lower prices and obviously will benefit shareholders and customers in the long run. So all of it certainly adding to that positivity and certainly seeing a bit of a pickup in that share price. And I think the market certainly reacted to that positive commentary and the fact that they have reaffirmed their guidance. So certainly a positive development, I think.
Bank of Queensland today of around 1.5%. Leanne, can we get your thoughts on this, the commentary there, the positive outlook, and, you know, perhaps is this one stock that could potentially do well out of the Murray inquiry as well if it requires the big banks to perhaps hold more capital?
It's an interesting question, Bridie. Firstly, having a look at the commentary out today, I think it did look fairly positive, and that's certainly what we did see in that share price reaction, up about 1.5% in the end. As you mentioned, they did provide a bit of an update to the start of FY15, so certainly looking quite strong, particularly in terms of those home loan approvals. But secondly, saying that they are confident on the outlook for the company going forward, particularly in terms of an improvement in that Queensland economy and also the housing market coming coming out of Queensland. If we have a look at housing prices, an average across a lot of the Australian capital cities up about 9% over the last year or so. In comparison, Brisbane up about 6%, and that's still about 4% below some of the prices that we saw in 2010. So I think they are fairly confident in terms of that continuing improvement in that Queensland housing market, and obviously they are highly leveraged to an improvement there. So we certainly remain confident in terms of that area. But secondly, saying that they do expect to continue seeing earnings and dividends to continue growing. Recently at their full year result, we did see a very strong set of numbers, really driven by higher net interest margins and lower bad and doubtful debt. So expecting that a lot of that will in fact continue. Since that result, the stock has been up about 5.5% or so. Certainly the commentary out of today, I think, does confirm our positive outlook on the stock. Back in about 2011, 2012, we did see a few setbacks in terms of those bad and doubtful debts, but the company is certainly starting to look a bit stronger. Their balance sheet is strong. They have adequate provisioning, and also they are well capitalised for any changes in terms of that financial inquiry in our mind. And obviously, as I mentioned, very well leveraged to any recovery in that East Coast economy. So overall, we certainly do like the outlook for the stock. Potentially looks a little bit undervalued at these levels, we believe, given the double-digit earnings growth potentially coming into 2015. But certainly that share price boosted by that commentary today, and our positive outlook boosted by that commentary as well.
Michael, what do you think?